Okay, everyone's talking about the AI gold rush, right? It's everywhere. And by 2026, we're not just talking about cool demos, we are talking about a gigantic global shift in where money is going. But here's the real question. Is everyone looking in the right place? In this explainer, we're going to cut through all that noise, follow the smart money, and figure out where the real lasting value is actually being built. And this quote, it really nails the core idea of what we're talking about today. You know, the companies you see all over social media, the ones with the flashy demos making all the noise, they are almost never the ones building real long-term value. The real story isn't about chasing the latest shiny object. It's about understanding and owning the systems that are powering this entire revolution. So what's really going on behind the curtain? Well, while all the headlines and our social feeds are obsessed with viral demos and slick new consumer apps, the really sophisticated investors, they're looking at something completely different. They see the invisible infrastructure. They see the workflows that are getting deeply embedded into businesses. And they see the companies with unique, proprietary data. That's the huge disconnect we're going to break down. To really get this, we've got to go back to a classic history lesson. In any gold rush, the smartest bet isn't on finding the gold itself. It's on selling the shovels. It's selling the tools that everybody needs to even have a chance. And in the AI gold rush, the most valuable tools, the shovels, are compute and data. I mean, look at how perfectly this applies to the AI world. On one side, you've got the prospectors, all these startups chasing the next big model. It is pure high-risk, high-hype stuff. But on the other side, you have the shovel sellers, the folks building the essential infrastructure. They're tapping into what's called structural demand. That means literally everyone, from the smallest startup to the biggest corporation, needs what they're selling. So, shovel number one, the biggest, most important one, is just raw computational power. Every single AI system, from the massive models being trained in secret to the little app on your phone, needs a ton of it to function. It's wildly expensive, it's becoming politically charged, and it is absolutely non-negotiable. So where is all that capital actually flowing? Well, it's not just about the big chip makers you always hear about. It's flooding into this whole ecosystem, these highly specialized data centers, platforms that let you basically rent GPU power by the hour, and super secure private clouds for big companies. The demand for all this stuff is just baked into the fabric of the AI economy, which, you can imagine, makes it a very, very safe bet for investors. Okay, so compute is the first shovel. The second one, and you could argue it's even more valuable, is data. You see, as AI models get easier and easier to build and copy, the only real defensible advantage, the only true moat you can build around a business, is owning a unique and valuable dataset that nobody else can get their hands on. And this is exactly why smart money isn't just throwing cash at AI companies. They're investing in data companies. Think about it. A medical imaging platform that has a massive, exclusive library of patient scans, or a financial network that processes billions of transactions every single day. That data is constantly growing, it's proprietary, and it creates this huge wall that stops competitors from even getting started. That's what makes it so incredibly valuable. So we've got the foundational tools covered, compute and data. Now let's look at how they're actually being put to work. What we're seeing is a major, major shift away from those general do-everything AIs and toward these highly specialized industry-specific solutions. And this chart tells the story perfectly. The big money is flowing into these really high-stakes industries. We're talking healthcare, where AI is helping doctors spot diseases earlier, the legal field, where it's tearing through mountains of contracts in minutes, and finance, where it's managing billions in risk. These aren't just convenient little tools. They are becoming totally essential to how these entire industries function. So why are investors so hyped about this vertical AI? Honestly, it just comes down to smart business. Those general AI tools, they're a dime a dozen. Competition is fierce, and prices are in a race to the bottom. But these specialized solutions, much less competition and incredibly high switching costs. Once a hospital or a law firm weaves a specific AI deep into its core operations, it is incredibly difficult and expensive to rip it out. That gives these companies real pricing power and a serious competitive advantage. All right, now we're getting to the real secret sauce of the AI economy. And believe it or not, it's not about the flashiest tech. It's about the stuff that sounds kind of boring, but is actually the most valuable. Workflows and rules. You know, the term AI wrapper used to be an insult. It meant you just built a pretty-looking app on top of another company's model. But the game has totally changed. The winning AI companies of 2026 are building workflow monopolies. They're not just generating text or images, they're managing entire business processes from beginning to end. And here's the key.
The AI model underneath can be swapped out, but the workflow, that's locked in. That's where the real power is.
Now, let's touch on something that's on everybody's mind: regulation. The common thinking is that regulation is bad for innovation, right? That it's a huge risk for AI companies. But is that really the case?
No way. For a certain type of company, regulation isn't a problem at all. It's their entire business model. It's not some hurdle they have to jump over. It's a powerful force that creates guaranteed, non-negotiable demand for what they sell.
See, as AI gets more and more regulated, a whole new and very profitable industry is just exploding: AI compliance. Companies are desperate for tools to help them navigate all the new rules and avoid massive fines. From an investor's point of view, this is a dream scenario. You've got guaranteed customers with budgets they have to spend, customers who almost never leave, and a market that's only going to get bigger as more rules get written.
So, what's the big takeaway from all this? In any gold rush, the absolute biggest mistake you can make is to get swept up in the hype and just believe the stories. The real key is to ignore all that noise and understand the underlying systems of the market. This slide really just sums it all up, doesn't it? While everyone else is chasing viral demos and celebrity founders, smart money is looking for something completely different. They want predictable, recurring revenue. They want deeply embedded systems. And they want that regulation-driven demand we just talked about. The most valuable AI companies of the future probably won't be the ones you see on social media. They'll be the ones quietly powering the world's most important industries.
So, there you have it. This is the smart money playbook for the AI gold rush. It's all about controlling the infrastructure, owning the workflow, capturing the data, and mastering the regulation. These four pillars are what create long-term, defensible value in the age of AI.
So, as the AI hype just continues to get bigger and the stories get even louder, I'll just leave you with this one question. Are you following the fleeting stories, or are you looking for the durable systems? Because at the end of the day, that's what's going to separate the real winners from everyone else in this AI gold rush.